Welcome to Investor in the Family Radio. Today I'm going to be going through talking points on Randall Forsyth's Up and Down Wall Street column from Barrons magazine. This week's column is titled Must-See TV, Trump versus Clinton. Clinton versus Trump. Again, by Randall Forsyth from Barrons magazine. So basically, we're going to be talking through some of the big highlights from last week and this week. And obviously, the title talks about a strong allusion to the debate which took place last night. But don't worry, that will not in any way impact the timeliness of today's news. So I hope you enjoy this update and overview from Randall Forsyth's article and also my talking points that go along with this article today as well. Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain and I'm your host. At Invest in the Family Radio, we believe that every dollar and minute we spend is an investment in something. And together, we're going to make the best investments that we can. So thank you so much for joining us. Remember, our goal here is to help you learn to invest financially and in all of life. You can always find more at investinthefamily.com and subscribe to the podcast via iTunes and the Google Play Store. And as always, if you like detailed show notes from today's show, simply text the word family notes, one word family notes, the number 44222, or sign up for the email list at investinthefamily.com. We'll make sure and get you an email with links to all sign-up bonuses. So look forward to having you join us via that method. But today, on to the article by Randall Forsyth from Barron's magazine, Up and Down Wall Street, entitled Must-See TV, Clinton versus Trump. And so let's give a quick overview of the article. If you're like me, you watched some of the debate last night, or at least maybe as much as you could stomach. I think I watched more than I could stomach, unfortunately. But in Randall's article, two main themes. He talks about the debate and he talks about central bank activity, and both of these two topics as far as how they have impacted and potentially could impact the stock market. Regarding the debate, talks about there's all the focus has been on the Trump and Clinton upcoming debate, which again was last night. And one of the big questions was, will any comments be made that could impact the market? And it appears like, for example, when Hillary Clinton made the comments previously about the EpiPen or other kinds of biotech pharmaceutical drug pricing, price gouging. Would any comments like that be made? And it does not appear I didn't hear anything when I was watching the debate. As I'm looking at the cover of the Wall Street Journal right now, it does not seem that anything of value was said by anyone or impact. So not much of an issue there. Both candidates will likely put pressure on drug pricing regardless of who gets elected, which is a surprise to hear that. I would expect Hillary to do that. Would be surprised for Donald, since I figured he would be, let's be honest. I think he's going to do whatever best benefits him, which is true for both of them. So I don't know why I even said that. But I would not be surprised to see that from a Democrat. I would be surprised to see that from a Republican, is what I should say. And for those of you who listened to the show a few episodes ago, heard Brett Jensen, who is, as far as I'm concerned, the biotech expert from an investing perspective, and he expects biotech to do well after the election, regardless of who gets elected. So that will be interesting. Candidates do diverge on their views on healthcare, not surprising, energy, and taxes, as you'd expect probably any Democrat and Republican to do. On healthcare, Hillary is going to continue to probably want to build upon Obamacare, and she actually has a legacy Hillary Care things that she wanted to get done back when her husband Bill Clinton was president she did not accomplish what she wanted to at that point, so I'm sure she would use this opportunity to continue to bolster her efforts in that regard. And Trump has been very clear he does not like Obamacare, does not like the ACA, so I'm sure he'll do whatever he can along with other Republicans to change or end that, if that's even possible. On energy, typical, Secretary Clinton is going to be much more focused on green energy opportunities and initiatives, whereas Donald Trump has talked about even ending some of the current partnerships that have been set up regarding green energy. And taxes, again, Hillary Clinton actually has some pretty intense taxes for the wealthy that she wants to implement. And of course, Donald Trump would probably not be a big fan of that. And as well, the race is essentially tied at this point going into the debate last night, which is remarkable. I've not looked at updates for today. I can't imagine that the debate last night, from what I saw, would have any significant impact on voters, except maybe to turn more voters away from both candidates, because in my opinion, they're both absolutely terrible. And sorry if you disagree with that. And so again, it doesn't seem like any major impact was had last night. But one interesting thing is they both have said they're opposed to the Pacific Trade Act, the TPP, and which is surprising, something Hillary Clinton had previously supported, but both are in opposition to that, which is surprising. Donald Trump has been very clear seems to be against almost every trade initiative, especially NAFTA, and then the Pacific Trade Partnership, the TPP as well. So a lot of stuff there in the debate and politics, which I honestly don't like talking about or focusing on just because it makes me sick, and I don't like the fact that our future is based upon this kind of insanity, but it is, and maybe the reason it's based on this kind of insanity is because enough of us aren't focusing on it. So my call to all of us, that I hope all of my listeners are people of character and integrity, and I hope that we will see this giant vacuum that exists in our country and much of the world regarding leadership, and that we will take some kind of stand. We will step up in our own little spheres of influence and lead with character and integrity to start making a difference. It doesn't happen overnight, but days, weeks, months, and years of activity like that, and I believe we can make a difference. So that's my call to action to you today. Randall Forsyth, in his article, also talks about central bank action, which feels a little closer to home regarding the markets, unfortunately, again, because if you're like me, it's not really exciting investing when it seems that regardless of fundamentals, all of our investments are very much tied to what a few individuals at the Federal Reserve and third, personal decision-making, how great of an impact that can have. And obviously the markets are hanging on every word from the Fed, which again is not a healthy scenario and does not in any way communicate a very healthy underlying economy supporting current stock market prices. A lot of themes here that are not new. You're probably tired of hearing them, which is all the more reason to not get tired of hearing them, because the way things historically go is we hear warnings, we get tired of warnings, we ignore warnings, and we start ignoring warnings even more until there aren't any more warnings and everyone is just happy, and you hear that idea of euphoria, and we're like, oh man, all those things I was worried about and people were warning us about actually did happen. It just happened after everyone was warning us, and we stopped paying attention. So don't do that. If you think these things should concern you, then do not let them stop concerning you, because remember, there can be a significant lag in response in the stock market to real things going on out there in the economy and the world. Sometimes that lag can be months, sometimes it could be a year or two. So if you have conviction about fundamentals that you want to respond to, then you ultimately are responsible for your investments. Do not let the lag in popular sentiment out there discourage you from what you think you should or should not be doing, whether you're bullish or bearish. That's up to you. But again, the central bank action of late has really been overshadowed by the election, because the election is a big deal. We're seeking to elect the leader of the free world, as the President of the United States has come to be called. But a quick flashback to last week, as far as the Feds, they had their meeting last week, and the Fed has strongly implied to expect a December rate hike, which I just think about how many times have they done that and then not done it. So we can't really take them seriously, but there were 3 dissenting members last week in the vote to not hike interest rates last week. And again, this is September 27th, 2016 that I'm recording this show. So in the September Fed meeting, they did not, or Federal Open Market Committee meeting, what do they call it, the FOMC meeting, 3 members dissented. So basically they would have rather hiked interest rates, raised rates, however you want to say that. But they didn't do it. So that kind of is supposed to be sending a signal that, hey, don't be surprised if this happens next time. And most likely next time would be December, because there's no way on earth they're going to increase interest rates a few days before the election in November. Which again, it's annoying. It's just really annoying because it's so much political job owning. And basically the Fed desperately wants to increase interest rates, but they keep not doing it because they know that they can't get away with it. So I think what they're doing is they keep throwing out there, hey, we may increase, and they want to see how the stock market responds. And if they get, a response that's not too extreme and they think they can get away with raising rates, they're going to, because if they don't raise rates in the relatively near future, they're going to lose, I'll say, all credibility, but definitely even more credibility than they already have lost, because it's getting to the point where people don't even want to take them seriously anymore because, oh, you're talking about raising rates. Thanks. You said that. You've been saying that for years and you haven't done it for years. Or you did once. 0.25% rate hikes during this past year. So won't be surprised if in December or early 2017, I've said this before, if they raise interest rates by 0.25%, if nothing else, just to try to save a little bit of face and maybe redeem a little bit of credibility. But as I mentioned in last week's Barrons episode, that there really is very little underlying economic support for doing so, and that that's on a U.S. perspective, but from a global perspective, there's just still so much instability that for the best economy in the world, or best large economy in the world, here in the United States to suffer a bigger setback in their markets due to an interest rate rise. Just, I don't know, not sure how well the rest of the world will receive that. And so, but the Fed knows that. And so it will be very interesting because they want to raise rates, but there really aren't the numbers to do it. And the Fed talks so much about being so data dependent. So we'll see how they play that. But also the Fed, here you go, they lowered the target rate projections. So basically their target rate projections going forward of where they want to see or expect interest rates to be going forward, they've lowered them again, which apparently seems to be very, very normal for them also. So you have this dynamic where it's almost like companies where they'll have a quarterly report and they'll set their price targets for the next quarter. And then throughout the quarter, they'll keep lowering and lowering and lowering them while no one's paying attention. And then they will end up surprisingly beating their price target, which is dramatically lower than their initial price target. But most people aren't looking close enough to pay attention to notice that. And so it looks great for them, even though it's not great. And so the Fed keeps doing kind of the same thing. So basically, they don't know what they're doing. That sounds rude. I don't mean to be condescending like that because who am I to say I know more about the economy than they do? I don't want to claim that and I don't want to be arrogant like that. But when I say they don't know what they're doing, they don't know how to fix a situation or maybe they realize they just can't fix it and they don't know what to do about that because they don't want to admit that either. So complicated stuff. Also big news is the Bank of Japan. Last week they left rates unchanged. And they said they're going to target rates at 0% as opposed to negative, which is notable. Honestly, if you're like me, sometimes all the different interest rate stuff, up and down, negative, positive, I may get the general idea, but sometimes extreme nuances can, I don't want to admit this, but sometimes be beyond me a little bit because there's so many ramifications throughout the markets as far as interest rates being up or down a tiny bit. That if there's just the markets are so complex and how they all work, and so how all these things can impact everything. I wish I understand it all better than I do, but I know that Randall Forsyth mentioned this is really as a positive thing for Japan to target 0 as opposed to negative. Which I mean, I could have told you that. So that's a positive thing. We'll see what ends up happening there. They still have the target. They want their inflation to be around 2%, and they're woefully not doing a good job, or woefully short of doing that, and have been for a long time. So we'll see how their desire to leave target interest rates at 0% as opposed to negative, we'll see how that impacts this situation. So basically, this all boosted stocks last week when on Thursday, but didn't really last. So I'm kind of flat in that regard. So that is, I kind of entered in a lot of my talking points into the overview this week from Randall Forsyth's article. But again, as I mentioned before, this is still a work in process. I'm still working through the best way to do this. I do like talking through this article because I do believe that the Up and Down Wall Street column from Barrons is a great way to tap into what's the big news, what's really happening last week and this week in the markets. There's so much stuff out there and we can all get overwhelmed with too much information. So I hope this column will give us some up-to-date information to be aware of and then be able to move on as well. And then when relevant, I'll give my talking points on it, which I've given a number of them so far. But really the biggest thing, so going back to the debate, I've mentioned, I feel like it was pretty uneventful last night, other than just being more embarrassing and concerning for me regarding our country and the direction of where we go as a country and how that'll affect our economy and our families and everything else. It's hard to say, but both candidates scare me as far as the trend that we are taking going forward as a country. And I hope that we as an investor in the family community can be part of the difference, positive difference, like I said earlier, by if we all look to fill this leadership vacuum in our country by being voices of character and integrity. Even if our spheres of influence may be very, very, very small, we can still make a difference. So please do so in your families, in your streets, your communities, cities, and beyond. And as far as central bank action, so really the theme of all this is the whole conversation was about the debates and central banks. So, which is where we are in the stock markets. Everyone's looking at, well, what's going to happen with the election and what's going to happen with the central bank activity, and that's what's going to determine our investing. So I want to remind all of us once again, focus on fundamentals. And the markets are fundamentally overvalued right now. And you need to do what you think is best, but please do not let the fact that the rest of, it seems like the majority of the investing public, just because they are not heeding a lot of these concerns does not mean you shouldn't, But if they don't concern you, then don't worry about it. But if they do concern you, then take action according to your concerns. Take appropriate portfolio action based upon what you believe and not what popular sentiment may or may not be, because popular sentiment is almost always wrong. And if you've joined us and been a part of our the Intelligent Investor reading group, which has been going fantastic, by the way, then we talk a lot about that because it's a big theme from Benjamin Graham in his book, The Intelligent Investor. One of the biggest ways to be successful as an investor is to differentiate yourself from the crowd. So if you're following the crowd, then the likelihood of you being successful over the long term is very, very low. So again, thank you so much for listening today. If you have any questions, please always let me know at Brian@investorinthefamily.com. That's Brian with an I, Brian. And this has been this week's review of the Up and Down Wall Street column from Barrons magazine, written by Randall Forsyth. So I hope you enjoyed today's discussion. I'd love to hear any feedback and your personal thoughts. If you don't forget to subscribe to the show at iTunes, Stitcher, or the Google Play Store. If you want to receive my summary sheets overview of today's show as well, simply text the word Family Notes. That's one word, Family Notes, to the number 44222, or visit investorinthefamily.com and sign up. We'll be sure to get you taken care of. And that'll be for these notes as well as every other sign-up bonus that I've given. So that's pretty cool. You should take advantage of that. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.